Why do most people never build real wealth? It's not because they are lazy. It's not because they don't try. It's because they start at the wrong step. They hear about investing and jump in. They buy stocks, crypto, or real estate without a plan. They chase gains before they build income. And then when the market drops, they panic because they weren't really investing. They were gambling. Real investors don't worry about dips. They don't sell in fear. They don't care if prices fall. Why? Because they don't rely on price. They rely on income. Wealth isn't just a number in your account. It's time. How long can you live without working? That's the true test. If you have no income unless you trade your hours, you're not free. You're trapped. And if you invest before you escape that trap, the trap tightens. So before you put money in the market, ask yourself this: do you have steady income that keeps flowing no matter what? Because if you don't, you're not ready to invest. You're hoping, and hope is not a strategy. You need a system, a machine that brings in money every month, one that works even when you're asleep, or sick, or between jobs. Only then should you invest. Because investing isn't step one, it's step two. You build a cash flow engine. Then you use the extra fuel to grow wealth. This is what no one tells you. They sell you trading courses and investment apps, but they skip the part about foundation. Start here. Earn first. Build cash flow. Then grow. Want to know who's already doing this? Billionaires. And they've been getting paid from your work for years. Let's look at how that happens. Jeff Bezos takes a salary of around $80,000 a year. Elon Musk doesn't even take a paycheck. Yet their net worth grows every second. How? They own assets. They own companies. They own shares. And you help them grow richer. Even if you don't work for Amazon or Tesla, every month when you get your paycheck, a chunk is taken out. That chunk funds pension plans, retirement accounts, and government trust funds. Those funds are managed by financial giants. And those giants buy stocks often from companies owned by billionaires. That's how money moves. It flows from workers to managers to markets, and eventually into the pockets of asset owners. That's the game. And unless you own assets, you're just feeding it. Owning stock isn't just about making gains. It's about being on the receiving end of the flow. If you don't own, you rent. If you don't earn from assets, you pay to use someone else's. That includes your job. That includes your rent. That includes your internet, your phone, your food. Every dollar you spend makes someone else richer, usually someone who owns the business. This is why wealth concentrates, because ownership scales. Labor does not. You can only work so many hours, but your investments can work 24/7, even on holidays, even while you sleep. But here's the twist. You can't become an owner if you can't hold, and you can't hold if you don't have cash flow. That's why investors without income lose, and investors with income survive crashes. During recessions, money moves from weak hands to strong hands. Strong hands are funded by cash flow. If your income stops, your hands shake. If your bills grow, you're forced to sell. That's not a strategy. That's a countdown. Real investors have no countdown. They build systems that keep running no matter what. That's how they survive storms. That's how they win. They don't try to guess the market. They prepare to endure it. Now let's talk about what kind of income they actually focus on. Not all money is equal. The key is cash flow. Do you like this personality? Flow means money that keeps coming in. Not once, not maybe, every single month, whether the market is up or down, whether the economy grows or shrinks. Cash flow doesn't wait for a good day. It just flows. Think about rental income. If you own a property and rent it out, you earn money every month. That's cash flow. Now compare it to someone who buys a home hoping the price will rise. That's not income. That's a bet. When prices fall, the owner with cash flow keeps earning. The speculator starts sweating. During the 2008 crisis, millions lost their homes. People couldn't pay their mortgages. They were forced to sell at a loss. But others held on because they had tenants. Their rent covered the mortgage. Some even bought more houses at rock-bottom prices. Now those homes are worth millions because they had income, not just hope. One man rented out his house, lived in a cheaper place, used the rental money to pay his loan. Even when property values dropped, he was safe because the rent never stopped. That's the power of consistent cash flow. It protects you from panic. It gives you time. Time is leverage. If you don't need to sell, you can wait for better days. But if your money is tied up and your income dries up, you'll crack. That's how people lose everything. They buy assets that don't pay them back. Then they are surprised when they can't afford to keep them. If you don't have income from your investments, you don't own assets. You own liabilities. True investors chase income first. Price comes later. They don't care about flipping for quick gains. They care about the flow, the inflow, every month, every year. Predictable, repeatable, reliable. That's the path to stability. That's how you build freedom. Let's talk about the mistake most beginners make next. They think they are investing, but really, they are just speculating. Buying low and selling high sounds smart, but it's not a strategy. It's a slogan. Speculators hope. Investors plan. If you buy just because the price dropped, you're not investing. You're betting, and every bet drains your time and energy. Real investing means knowing what to buy, when to buy, and how it will pay you, not just what it might be worth someday. Speculators buy based on emotion. They chase news. They follow hype. They load up when things feel cheap. And they freeze when prices keep falling. They double down, then double again. They call it dollar cost averaging. But they don't check if the thing they are buying has real value. They just assume it'll bounce back. Sometimes it does. Sometimes it doesn't. And when it doesn't, they are stuck, buried in losses, out of cash. No way to recover. Investors never rely on bounce backs. They buy income. They buy value. They protect their downside. They know that if a stock drops but still pays dividends, they are still winning. They know that if a property's value falls but the rent keeps coming, they are safe. They understand the difference between growth and survival. They don't chase dips. They wait for trends. They buy when markets are rising, not falling. They ride momentum, not myths. It's not about buying the bottom. It's about buying what works. Even if you miss the lowest point, you can still win. If the price goes from 50 to 130 and you bought at 100, you still made money. Waiting for the perfect price often leads to no action, and no action means no results. Investors act when they see signals, not just discounts, not just drops. They want strength. They want recovery. They want movement. Smart investors don't try to catch a falling knife. They wait for the knife to hit the ground and stop shaking. Then they pick it up carefully, because timing matters less than trend, and cash flow matters more than timing. If your investment doesn't pay you regularly, it's a get. Don't bet on rebounds. Bet on revenue. That's what separates risk from ruin. Let's look at why Warren Buffett gets this right and why copying him can still lead you wrong. People say Warren Buffett bought during the crash and made billions. That's true. But here's what they miss. He didn't guess. He didn't gamble. He had cash flow. Buffett runs a business. That business makes money every day. It collects management fees. It earns profits. It brings in capital whether the market is up or down. So when the crash came, he had cash. He wasn't desperate. He didn't need to sell. He could buy and wait and profit. Now imagine you copy his strategy, but you don't have his cash flow. You buy the dip. The dip keeps dipping. You buy more. You run out of money, and the market still drops. Now you're stuck. You don't have time. You don't have income. You don't have peace. Buffett can wait 10 years. Can you? That's the difference. Buffett wins because he plays a different game. He doesn't invest like an employee. He invests like a business owner because he is one. If his investments lose money, his business still pays him. If his stocks go sideways, his income still flows. That's what gives him power. That's what gives him time. That's what gives him confidence. If you want to invest like Buffett, build income first. Don't just mimic his trades. Mimic his structure. Have a business. Have a system. Have a surplus. Only then can you handle downturns. Only then can you think long term. Investing without backup is gambling. Investing with cash flow is freedom. This is the mindset shift that changes everything. Next, let's talk about how most people misunderstand diversification. Brion says don't put all your... Most people don't see a crash coming until it's too late. They wait for headlines. But by then, the smart money has already moved. There are two signals you can track that give early warnings. First, the yield on the U.S. 10-year Treasury bond. Second, the U.S. dollar index. Let's break them down. When investors fear a crash, they rush to safety. For many, that means buying U.S. government bonds, especially long-term ones. When demand for these bonds rises, their prices go up, but their yield or interest rate goes down. If the 10-year yield drops sharply after a big rise, that's a red flag. It means fear is returning. It means people want safety. It means a storm is coming. Now the dollar. When panic hits, people want cash. Not just any cash. They want dollars. That drives up the dollar index. If the index spikes, it signals global stress. It means money is fleeing risk and heading for shelter. Watch these two. If the 10-year yield starts falling hard and the dollar index starts rising fast, get cautious. That combo has shown up before every major crash. In 2008, in 2020, even before the dot-com bubble burst. You don't need to guess. You just need to watch. Smart investors look at trends, not news. They prepare early. They act quietly. They protect their foundation. Because when the crash hits, it's too late to build defenses. If you're already exposed, you're vulnerable. But if you have cash flow, diverse assets, and a calm mind, you survive. And sometimes you grow. Let's move into the strategy that helps you build that kind of protection from the ground up. Even if you're starting with nothing, you don't need money to build wealth. You need a path, a system, a starting point that doesn't rely on capital. That starting point is your career, not your job. Your career. A job is something you trade hours for. A career is something you build. It has momentum. It has direction. It opens doors. And one of those doors leads to cash flow. If you want real freedom, build something that earns while you sleep. It doesn't need to be big. It needs to be stable. It needs to grow on its own. Low startup cost, high leverage, simple to repeat. One model that works is creating content, teaching what you know, solving real problems. YouTube is one of the best platforms for this. It pays you when people watch. It grows without needing a warehouse or a team. It scales with your skill and your time. Right now, more people are watching videos than reading books, and advertisers are paying for attention. You don't need fancy equipment. You need clarity, a clear message, a clear audience, a clear system to turn time into income. Over time, your videos keep earning. Old content brings in new money. That's leverage. And once you have that money flowing, you use it to build assets. You don't start with investment. You start with production. You create value. You earn trust. You build a system that works with or without you. That's how you turn zero into freedom. Not with luck, not with trading, with a business model that gives you time. Because time gives you power, and power gives you options. Now let's talk about what that power looks like when you've built a financial moat around your life. A financial moat keeps you safe when the world shakes. It's the gap between you and panic. It's the reason you sleep well when markets crash. It's built with income that doesn't stop. Not from a job, from systems, from assets, from ownership. If you have to work to get paid, you're exposed. If money comes in without you showing up, you're protected. That's the goal. Not millions, not fame, just freedom from fear, the ability to say no, the space to think long term. You build your moat in layers. First layer is skills. What can you do that solves problems? Second is systems. How can you earn without trading time? Third is storage. Where does your money go to stay safe and grow? Each layer adds strength. Each layer reduces risk. If one fails, the others hold. If your business slows down, your rental keeps paying. If the stock market crashes, your cash buffer holds. If inflation rises, your real estate holds value. Wealth isn't built with speed. It's built with structure. Step by step, layer by layer. So when life gets hard, you stay standing. You keep earning. You keep growing. Because your moat is deep. And your time is protected. That's real wealth. Let's talk now about how to build that wealth even if you're starting from scratch today. If you're starting with nothing, start with one skill. One problem you can solve. One thing you can do better than most. That's your lever. Use that skill to create value. Turn that value into income. Turn that income into assets. Then turn those assets into freedom. That's the chain. It begins with action, not capital. You don't need 10 ideas. You need one that works. You don't need permission. You need motion. Start with a service or a product. Teach something. Build something. Fix something. Then repeat. Package it. Sell it. Refine it. Over time, your skill grows. Your reputation grows. Your income grows. Then comes the next step. Keep your living costs low. Let your cash build. Don't inflate your lifestyle. Inflate your savings. Use the extra to buy assets. Real ones. Cash flowing ones. Skip the hype. Skip the speculation. Build slowly. Grow wisely. And protect your downside. This is how people climb. Not by luck. Not by shortcuts. By choosing the right order. Earn. Save. Invest. Then scale. If you jump to investing too soon, you fall. But if you climb step by step, you rise. Let's look now at how smart investing really works once you're finally ready to do it. Smart investing doesn't start with excitement. It starts with peace. You invest when your bills are covered. You invest when your income is stable. You invest when you don't need fast results. That's when you make good decisions. Not out of fear, not out of pressure, but out of clarity. When you're financially secure, you don't chase. You select. You study. You wait. Then you act. And when things go down, you don't panic. You hold. You add. You stay calm. Because your life doesn't depend on this one trade. You have a system behind you. That's the key. Two people can use the same strategy. One wins. One loses. The winner has income and patience. The loser has stress and deadlines. It's not just what you invest in. It's what you're investing with. If your only source of money is your job, one bad investment can break you. If you have multiple income streams, one bad investment is just a lesson. That's why systems matter more than stocks. Structure beats strategy. You don't need perfect timing. You need enough time, enough room, enough margin. That's how you win. That's how you last. Let's finish with the full blueprint how to protect your future, build wealth, and create lasting peace. If you've made it this far, you're already ahead of most people. You're not just scrolling. You're learning. You're thinking differently. And that's how change begins. Remember, wealth isn't about luck. It's about structure. It's about building income. Then using that income to buy back your time. That's the mission here on the Passive Path. To help you earn smarter, invest wisely, and live free. If this video helped shift your mindset, hit like. If you want more content like this, subscribe to the channel. Drop a comment below and share one takeaway you're going to act on. And if someone you care about is struggling with money or thinking about investing, send them this video. It might be what they need right now. Good luck on your path. Feel free to check out the other videos on this channel. See you in the next one.